are. I'm double recording it so I can pop it on YouTube later. But anyhow, so your S&P 500, what's the story? Well, similarly to what you actually saw on your dollar yen, you came up to these previous highs. Now, again, as if by magic, suddenly you've got Fed members, Fed Goolsbee starts to say at the exact same time you reach this all-time high that he thinks it's overdone. He thinks all this buying is just too much. He doesn't think it's realistic. He thinks everyone needs to be careful. He thinks the effects of tightening monetary policy, putting rates up, hasn't been felt yet. All of that negative talk just happens to come in when the price comes up to a previous high. Okay, so essentially starting off with the fundamental part is what you need to do. And my co-mentor who I'm starting with, he's very keen on this. He's very good at it. He likes to talk a lot about economic sentiment, the impact it has on the markets, because at the end of the day, markets are ruled by sentiment. You will find that that is entirely the case. Technical aspects, they give you an idea of where you'd probably like to enter to get a good price. But overall, the ruling factor is always sentiment. People sell when things start to get sour. They buy when things aren't sour and they're more fruitful. Okay, that's what caused these two rallies here and the rallies in between. So the current rally you've seen is reflective of exactly what I just said. You've suddenly had data which is encouraging for investors. All right. Now, you always have this at some point. At some point, you are going to have data which is good. You are also going to have data which really isn't as good. Okay. And it's just being prepared for both, because you can never really, it's hard to guess when that data is going to change specifically. But the fact is, with trading, you don't need to know when that is. You don't need to know when that data is going to change at all. Okay, you just need to be able to take the good prices and let the sentiment do the work. So the sentiment carries your technical entries essentially. So the two parts of trading, you've got news, sentiment, market mood, what people are doing and what quantity, most importantly, with sentiment they're doing it in. And you've got the technical side, which is purely about more or less business, to be honest. Trading is a business. You're buying low and selling high. So the technical aspect is what allows you to run it as a business. The sentiment is what drives your business. And that is the same in any field. Okay, if you own a house building company, for example, like ones in the UK, like Persimmon, Barratt Developments, Vistry, places like that, they suddenly have this drop in share value once you've got the news out saying that people aren't buying homes, they can't afford it, so they're not building as many. All of that carries the price. Okay, so if you shorted it, great, you would be ready. You've taken a high price. It's likely that therefore you're going to have a larger retracement, and then the news comes in, of course, carries it to that point. And you can see this is an area where I've called it short already, and you've started to get your fall. And it, like I said, it came about just up here. Now, someone in the chat box, person who's here quite a lot, which is great. Hopefully see you in my private trading room. Like I said, don't forget you can get your waiting list spot underneath if you've just come in, and don't forget to get my free training if you've just come in as well. Both links are under the stream over here. Please don't ask me where they are because I've said it so many times. Under the stream are the links. Please do press the boost as well. Thank you to everyone who's just done that or is doing it, or perhaps watching this in the New York session and doing it. So yeah, someone said about a double top. The thing is with things like that, and many of you know I'm not particularly a pattern trader. I don't really like the idea of calling them patterns, because what people do is when they see those patterns, they believe they are the ultimatum, and they trade in an existential way. So what they do is they see, like I said, a double top, for example, and they think, oh, wow, that's a double top. I better sell everything I've got because it will fall, because it's a double top. But that's just not consistent, okay? And the reason why people lose money is because they try to trade with patterns repeatedly, and it doesn't really work, because, a lot of these things rely on basically finding out what has happened after it has happened. So if this is a double top, you'll only get people start to say it's a double top after it's fallen, okay? It's potentially going to be a double top, but you could call it whatever you want. I mean, essentially, I just call it a short, whether it's a double top or a dolphin's nose or a koala's arse, it doesn't really matter. Okay, it's a short, and that's all that I care about is simply the price. Now, the important thing with this, as I was teaching a member yesterday, and if he's watching this, I'm sure he will know what I mean. The problem is when you have fallen, you've got this very, very early rejection. Now, when people load in and they believe in these patterns and they think, wow, this is just going to fall because it's a double top, it's this, it's that, double tops are what make things work. Patterns are repeated in the market, okay? The market does repeat itself, but I don't particularly believe it forms squiggly patterns that, 5-year-olds could draw. It's just the way I do things. But anyhow, you've had minor rejection, and that has come about because of long-term support, okay? And it's long-term early support. The thing that has stopped this market crashing just yet is this, okay? Because you're falling to where you've had price rejection very early on. Now, often it's the case that firstly it gets tested with a minute move, and then you do get a further retracement. So I am short biased till we get down here. I think you'll get a retracement on your S&P. I think it's getting more unrealistic, really, to say that you're going to go higher and higher and higher. It's not impossible, and if it happens, I'm not going to be completely shocked. And that is what's going to catch a lot of traders out. They don't know how to manage their risk if you did keep going up to new highs, okay? But just beware, that can happen. But overall, I would expect a larger retracement back to at least this area of early support. And that's where I would start to buy, okay? And I would do it very lightly. So, if you're going to buy, it's just too late here. You're at a high and you're at very, very early support. Therefore, if you're selling and you're holding your short, okay, you're going to have to go through this first until you can get here, okay? And I think ultimately you will. But if you continue to sell there or you continue to buy here, naturally, like I said about running a business, you're going to be getting a poor business decision price. In other words, you'll be buying the goods really high up and selling the goods lower down, which is wrong. You want to buy the goods low and sell them for more. That's essentially how a profit is made. Okay, so I would expect to move back and higher up. Now, the difference between my private trading room opening and this is that we will show you all our entries and how we're managing them. If you do this on your own, it's hard because your size and all your trade management rules go out the window, okay? And you'll probably get stopped out. So that's why I don't provide signals. I just talk about what I think in terms of direction. That's the best I can do on here. And then, of course, like I said, privately, that changes. Now, this picture is the same for various different global index markets, and you've seen that across the board. And I took gains across the board as well, mainly on the French stock market and the Australian stock market yesterday. But this fall is bringing you to very, very local support. So I'm going to refresh my chart. This is the DAX. You can see that you've got some really early rejection because, first of all, you've got local daily support. In other words, where people are buying at the moment. And you've got not strong enough sentiment to the downside to pull you down. You haven't got that thing yet that has said, you know what, let's sell the DAX. There's room for it to fall. Okay, once you get that, you'll probably break through. And being at a larger all-time high as you are, you should only really be short biased. Again, if you're getting long up here, you're naturally buying highs. If you naturally buy highs, you cannot and will not make money. And as I always say, you don't have to believe me on this. You don't have to take my word for it because you can just have a look yourself. Okay? Statistically, not every time, but statistically, more often than not, if you buy after moves up and you sell after moves down, you are just basically waiting to lose your money. Okay? So you've got to be very careful. You want to short on a rise and you want to buy on a fall. That is how you attain natural market value in any instance. Okay? So just bear that in mind. I mean, like I said, it's the same across the board for these global index markets. And you've got the same on your Australia. Okay? Yesterday, I had it short up here. I took gains early because I was anticipating minor rejection there. All right. Why was I doing that? Well, if you look across here, you can see there's all this minor rejection. There are support areas. So naturally, one may assume on statistical probability, which is basically how trading works, you may be more likely or more inclined to have a light bounce, which is exactly what happened. So I exited those longs and reshorted, and I'm still short biased for an impending move to the downside, ultimately when that occurs. Again, like I said, you'll need that sentiment for that to occur. You'll need something to say, well, things aren't as good as we thought, and you'll probably see you start to trickle back to these key moving averages. That doesn't involve a pattern or anything like that. It involves science, okay? Natural market probability. Because at the end of the day, if you go off logic, you go off things that have worked and always work and rely on facts, not, patterns are particularly fictional things because you've decided that for some reason that's what is going to happen. You've decided based on a drawing, essentially, that is going to make what you think happen. It's like eating a bag of sugar and thinking it's not going to raise your blood sugar, or it may raise your blood sugar, or if you eat it in a certain way, it's going to cause your blood sugar to rise less. It's just it's fiction, it's unfactual. So, trading factually allows you to avoid those emotional factors or the if question. Okay, the if this and if that. If you repeat something over and over again, which isn't down to your drawing skills, essentially, you tend to be better off, at least in my opinion. So I don't buy into the school of thought with patterns. I'm not saying people who use them don't particularly make money in some cases, but I would say largely they don't across the board. The CAC40, again, I'm short. You've just had these enormous rises. I just don't think it's going to be sustained. And in any case, I'm getting short value because there's an extremely high price. And the best place I can short in the event I get a larger fall is like that. And again, you've got this wall of support early stopping you from falling. Okay. That is what is preventing the market from sliding straight under. It's all of this in the way. Okay. So just be clearly aware of that, because early support can always be seen on much higher time frames, and it will give you an idea of how fast the market is likely to fall. If you've got this in the way, sometimes it's not going to be terribly fast. So that is your indexes. As I said, like button have not refreshed yet, but do press it. Top right if you're on your phone, and you can join my private trading room here or get my free training there. That is, like I said, indexes. So I'm going to just cover a few other markets.